Step into any Nigerian city and you see two walls of retail colliding. On one side, shiny malls with glassy fronts, supermarkets, and international brands. On the other, sprawling open air markets, buzzing with traders, selling anything from fresh tomatoes to phone accessories. The truth, the informal sector still dominates, and ignoring it is why foreign retailers fail. Take my example again, Shoprite, Africa's largest supermarket chain. When it entered Nigeria in 2025, expectations were sky high. For 15 years, Shoprite grew to 25 stores, anchoring major malls and becoming a household name in urban centers. But behind the scene, behind the glossy ads, locked a harsh reality. Currency devaluation, slashed earnings, foreign exchange shortages made it nearly impossible to repatriate profits, and logistic nightmares inflated costs of imported goods. Meanwhile, many everyday Nigerians, squeezed by inflation, often preferred open markets where prices flexed and bargaining was expected. By 2021, Shoprite sold its Nigerian operations to a local buyer, retreating from a market it once hoped to dominate. Now compare that with Spar, Nigeria, operating by a local franchise partner, RT Group. Instead of importing, Spar leaned into local sourcing, stocking Nigerian produce, staples like gari and beans, and even adjusting product mixes store by store. By embedding in local supply chains and tailoring assortments to Nigerian baskets, Spar grew revenues by over 50% in 1 year. The lesson, local franchising and sourcing turned a foreign brand into a Nigerian retailer. Adaptation works outside supermarkets too. Quick service restaurants like Domino's Pizza realized early that a New York slice alone wouldn't win wallets. So they introduced combos with jollof, rice, meat pies, and more affordable bundles. South African low-cost retailer Pep survived by selling ultra-affordable clothing and even offering lay-away options, meeting Nigerians at their budget reality, not above it. And then there's Coca-Cola's timeless strategy. Rather than relying on supermarkets, Coke built an army of micro distributors and ensured even the smallest roadside kiosks had a cooler stocked with Coke bottles. Although the commission is now fierce from Big U, they didn't fight informal trade, they fueled it. That's why decades later, Coca-Cola remains omnipresent, while many former retailers have come and gone. For decision makers, the Nigerian retail takeaway is this: you don't win by trying to drag consumers into malls, they will pull you into the market instead. Build hybrid models, online, offline, kiosk, supermarket, gbogbo, just add more. Offer smaller pack sizes and budget lines to suit daily cash spending. Embrace informal networks as distribution partners, not competitors. Here is the question for the boardroom: can our product be sold from a roadside stall as easy as from a mall shelf? What's our 100 naira pack strategy or 200 naira, 500 naira pack strategy to capture the mass market? Should we franchise locally to align incentives with Nigerian operators who know the terrain better than we do? In Nigeria, the informal economy isn't a rival, it's the bloodstream of commerce. The companies that plug into it don't just survive, they thrive, they make it.